Welcome to the Crypto Breakdown Show, your guide through the fast-moving world of digital assets. We break down the latest market moves, industry trends, and the big stories shaping the future of crypto. Just a quick reminder, this isn't financial advice. We're here to share news, insights, and updates to help you stay informed and ahead of the curve. All right, let's get started. Recapping some of the top news from October 11th. Today, we're diving deep into a week that truly tested the resilience of the crypto market, showcasing both its wild volatility and its inherent innovation. Imagine this: a sudden, powerful storm hits the crypto seas, sending waves crashing and markets reeling. This past week, we witnessed the largest ever liquidation event, a staggering $19 billion in leveraged bullish bets wiped out in a mere 24 hours. The culprit? An unexpected announcement from President Trump regarding additional tariffs on Chinese imports. This geopolitical tremor sent shockwaves across the digital landscape, leading to dramatic flash crashes. On Hyperliquid alone, over $1.23 billion in trader capital evaporated, leaving thousands of wallets in distress. Amidst this chaos, even stablecoins felt the pressure. Ethena's yield-bearing USDe briefly depegged, dropping to 65 cents before a swift recovery. Ethena Labs quickly confirmed that mint and redeem functionalities remained robust, and USDe maintained its over-collateralized status. Altcoins, as you might expect, took a significant hit. XRP plummeted 41% and Dogecoin crashed 50%, though both saw impressive partial recoveries as institutional bids swooped in. Aave's native token, AAV, experienced a dramatic 64% flash crash. But here's where the resilience shines through. The Aave decentralized lending protocol successfully processed a record $180 million in collateral liquidations within an hour, entirely without human intervention. Founder Stani Kilchov aptly called it the largest stress test ever. It's a powerful testament to the robustness of decentralized finance, even under extreme duress. But what about safe havens in such a tempest? Interestingly, gold-backed tokens like PXG and XAUT held firm, acting as a refuge for investors. They mirrored gold's strong rally, boasting over 50% year-to-date gains. However, some analysts warn that gold's rally might be nearing exhaustion, suggesting a potential slowdown in its upward trend. So, while these tokens offered protection during the crash, their future performance might be more subdued. Now, let's talk about the intricate dance between innovation and regulation. U.S. lawmakers are currently locked in contentious negotiations over market structure legislation for digital assets, aiming to define the regulatory roles for the SEC and CFTC. A proposed framework for DeFi, which would require customer-facing projects to register as brokers while exempting non-revenue-generating decentralized projects, has met strong opposition from the crypto industry. These disagreements, coupled with an ongoing government shutdown, cast a shadow of doubt on any significant bill passing before next spring. Meanwhile, the institutional world remains divided on Bitcoin. Hargreaves Lansdown, a major UK investment platform, continues to deem Bitcoin not an asset class, citing its lack of intrinsic value and volatile history. Yet, paradoxically, the firm plans to introduce physically backed Bitcoin and Ether ETN trading for qualified clients in early 2026, adhering to strict regulatory guidelines. This move follows the UK's FCA lifting its ban on crypto ETNs for retail investors, signaling a cautious but undeniable shift towards broader adoption. On the other side of the spectrum, Cathie Wood's ARK Invest remains steadfastly bullish. They predict Bitcoin is poised for significant fourth-quarter gains in 2025, citing strong on-chain fundamentals, increasing institutional adoption, and favorable macroeconomic conditions. Their report highlights bullish network activity, growing holdings by long-term investors, and record institutional ownership through ETFs and digital asset trusts. ARK believes easing inflation and policy shifts could further fuel Bitcoin's demand, solidifying its role as a strategic portfolio asset. Shifting gears to future horizons, blockchain technology is set to drive the agent-to-agent AI marketplace boom. For AI agents to achieve true autonomy and facilitate open commerce, they require access to resources and the ability to self-custody assets. Programmable, permissionless blockchains are ideally suited to provide this, offering the transparency, composability, and global accessibility necessary for agents to communicate, collaborate, and trade efficiently, fostering an open agent-to-agent economy with greater user control and innovative service monetization. And for those who love blending their everyday spending with crypto, Coinbase is stepping up. They're launching a new American Express credit card in the US this fall, uniquely designed with Bitcoin's Genesis block data and referencing its Coinbase transaction, a delightful nod for Bitcoin enthusiasts. The card will offer up to 4% Bitcoin cashback to Coinbase One subscribers, aiming to align everyday spending with Bitcoin's core philosophy of financial sovereignty. This innovative offering will compete with existing crypto rewards cards, distinguishing itself through its deep symbolic ties to Bitcoin's origin story. Finally, a word of caution for those navigating the high-stakes world of crypto perpetual futures. The mechanism of auto-deleveraging, or ADL, can shock even advanced traders. Doug Colquitt explains it as a last resort system that trims portions of profitable positions when liquidations overwhelm market depth and insurance funds. It's effectively kicking winners off the plane to prevent cascading failures and ensure the solvency of zero-sum markets. While frustrating, ADL is a necessary evil to maintain market balance, typically targeting large, highly profitable, and leveraged accounts when activated. What a week it's been, showcasing the incredible dynamism, challenges, and unyielding innovation within the crypto space. That's a wrap for this edition of the Crypto Breakdown Show. Whether the market's pumping, dumping, or just drifting sideways, we're here to help you navigate it all. If you enjoyed the episode, be sure to like, subscribe, and share it with someone who's crypto curious. Thanks for listening, and remember, no matter where the charts go, stay grounded, stay informed, and stay crypto smart. Until next time.